Hello, everyone. John Coleman here with my good friend Norm.
Hey, everyone. How are you? You're listening to the T and Mortgage Podcast, episode number 6. All right, John. So today we're going to go over the steps of your famous roadmap for applying for a mortgage and buying a property in Ireland.
I am indeed, Norm. I suppose the best place to start is describing how we operate and why we view the roadmap as being incredibly important in our kind of overall values or overall beliefs. First and foremost, I see ourselves as very much in the education role. Okay, our role basically is to educate people where they stand and what they might need to do to get the home that they want. Buying a house isn't you wake up one morning and you're ready. It's a journey, Norm. It really is a journey. So hence the word even roadmap, which is your starting point, your ending point, and then what you need to do in the middle to get there. Our view on this is very much as simple as I said. We educate, and then hopefully when we get you ready from a business point of view, you'll then be happy for us to represent you with the banks, because that's in effect what we do. We educate, and then when you're ready, we facilitate it. We manage the process from that point forward till the day you get the keys to your house. So that's a kind of a summary, and that's why we viewed the roadmap as really, really important, because we need to tell you what you need to do to get what you want.
And I think that is super important and even valuable, because we do this all day long. So the terminology, the steps, the process, it's second nature to us. But we often forget that someone coming in and it's their first time buying a property, let's say, this is all so confusing. They're getting different voices in their head from different people and opinions and reading different things in different parts of so to have it broken down step by step, what you really need to do, you start the journey here, you end your journey getting the keys to your new home and everything in between. I think there's value to that.
Oh, absolute value, because there's some conversations I have with people, and it can be, it's from a business point of view, you wouldn't like it to take this long, but it can be 2 years before my first conversation and the point whereby they actually get the keys. In some cases, it can be even longer. Sometimes it can be even short. It depends on where you are, but getting yourself informed is the starting point, because as you said, it's quite complex, even though in theory you'd hear things bandied about. Oh, I'll get 3.5 times my salary. I'll get 4 times my salary. And you take little pieces of information and you make bad assumptions on the back of that. And you think, oh yeah, we're ready. Well, when reality comes, that isn't the situation. So it is talking to someone like me. It doesn't need to be me, but talking to someone who has experience, who does this on a day-to-day basis, and who can basically tease out the little nooks and crannies that might cause you the problem, or that you wouldn't think about because you're not doing this on a daily basis.
Yeah, that's great. And what you said too, I want to reiterate, you don't need to be a current client or signed up or doing business or handing over money to get this education and to go through the roadmap. You have videos. We're talking about a nice written out PDF guide. You give consultations to people all day long. So any of this information is free for people to get started.
Yeah, no. My view on this from a business point of view is we educate, and then hopefully we demonstrate enough value that when they are ready, that they would then be happy for us to represent them. If they don't, so be it. That's
the only way to do business the right way, huh? Yeah. So I have in front of me, and I'll through this podcast, if you're listening to the podcast, you won't be able to see these charts and forms and visuals, but of course we could email them to you. We could have links to them so you could see everything while you're listening if you'd like. And we also decided to do this via video, not only because you're so handsome, but also because we wanted to flash tubes.
This is against my best wishes, by the way. I did not. This is not what I wanted to do, but you forced me into it.
I forced you into it because I think, we'll also flash some of these things we're talking about on the screen as we're doing the video. So I think it was worth an exception this time, huh?
Okay. It's a once off, Norm. It's a once off.
You got it.
On video.
Got it. Well, yeah, I'll hand the microphone to you. It's already in your hand, but if you want to just start rolling through it.
Yeah, well, I suppose the starting point is, well, 2 places. One, knowing what you want to achieve, and then, as I said, knowing where you are. Okay. So now that knowing what you want to achieve can always be a little bit loose. Like, it's around the house price. Okay. What value house do do you want to buy? Okay. So you'll have done some level of research, as in the areas you want to live in, or you might have a vague idea around what you may qualify for from a mortgage point of view. So you do tailor what you're looking to achieve based on that. But that's your starting point. Okay, I would see myself buying a house for 400,000. Okay, the new house, it's just outside Dublin. That's what I want to make happen. So, how close am I? Okay, so the first point, the most important point to this is, well, what are the banks going to look at? Well, it's how much will the banks lend to you? Okay, so that's based on your income. So how much money are you earning will determine how much the banks will lend to you. Now, that's not as straightforward as it sounds. You might be earning X and Y, but X and Y could be made up of basic salary. It could be made up of bonuses. It could be made up of commission. Each little segment is treated differently by the banks. Okay. So thinking I'm earning X, but the bank mightn't view you as earning X. So we need to drill down with our questions to get a real forensic understanding of how you are paid, because that ultimately will determine what the banks will lend to you. So the banks will lend you money based on how much you're earning. That's the first thing. And knowing that how you're paid and how long you've been working will dictate that. And that's probably the first crucial piece of information that you need to get. Okay.
Okay.
Second thing you need to know is, okay, right, that's how much they'll give me. Well, how much do I need to bring to the deal? Okay. I mightn't have any savings at the moment, but so what do I have to save in between now and the point when I'm getting ready? Okay. A lot of people will have heard, oh, we need to bring 10%. Okay. But 10% is only the starting point. You then need to factor in stamp duty, which is a government fee that gets paid at 1% of the cost price. You then have to pay I'm going to use a solicitor, lawyer in your words, Norm, which is somewhere in the region of about 3,000 all in. So it's not just 10%, it's 10% plus an extra 6,000 or 7,000, depending on the price range of property. But then you may qualify for there's government schemes. So if you're buying a new property, you might qualify for the Help to Buy scheme. Or there's another new property called the First Home scheme. So there's two additional schemes that you could potentially use if you're buying a new property. So that might shape your thinking in terms of what you're going to do, whether you're going to buy a new property or secondhand. Because if your savings are limited at this point, but you've been paying a lot of tax, well, then the go-to solution, or the quickest go-to solution, is a new property. But on the other hand, if you're able to get a gift from that, a gift can sometimes be money that comes from a family member. Now, it may not be a real gift, but if it's presented by the bank, it's money coming from parents,
gifted from a family member,
from a family member, that can be used. So these are all little nuances that need to be factored in, or the individual needs to have a full understanding of, to help him make the ultimate decision. Well, am I going to go looking for a new property or secondhand? The area he may want to live in, or she may want to live in, may well be that there may not be any new properties. Right. So with that information, saying, okay, well, actually, we're going to need to save 40,000. Okay. Yeah. Now, and if they're at the starting point where they've no savings, well, that's going to take a long time to get there if there's no gift available. So that might reshape their thinking in relation to, in relation to where they want to buy. I don't tell people what they should do, okay, or where they should buy, but the information I give them can help shape their thinking in relation to what they can achieve. Does that make sense?
And their strategy, like you said, whether it's going to be, let's work on this for a year, maybe we need to save longer, or maybe if we're new home, older home, what area. Let me ask you this, and this is a super over general simplification, but of all the people that come to you, what percentage are easy, clean, simple, with their income, and what percentage are a complete mess and you have to really roll up your sleeves and get in there and work the numbers? And
it's a great question. I think in reality, right, if it was all too easy, there'd be no need for me.
Everyone would do it. Everyone would own a home. Yeah.
No, but not even they would own. They wouldn't need my advice, right? They wouldn't need someone like me who does this day in, day out for, would you believe it's over 20 years at this point, Norman? It scares me when I say that. But anyway.
You're a lifer, man. At this point, you're a lifer.
Huh? Anyway, Yeah, I do keep saying to clients when I'm bringing them to say, you're getting the keys to your house. Listen, I'm not changing my career at this point. So if you still need my help, please reach out. But going back to your question, I'd say of people who are ready at the get-go, when I had my first conversation with them, you're probably talking between 10 and 20%, right?
Yeah.
That will be the numbers about who might be ready to go. Obviously, that they're the ones you want to talk to every single day, because they're the ones that you can help in the quickest. But ultimately, I need to educate people all the time. So I'm doing this on a daily basis, knowing that if I'm helping 10 people get ready today, in 6 months' time, they're going to be ready, or 12 months' time, they're going to be ready. So from a business point of view, it's all about just helping them get ready. Okay.
Yeah.
But so in reality, we might be help put kind of 40 of these roadmaps out on a weekly basis, right? Of those 40, I would say this is probably somewhere between 8 to 10 will be ready to go right now. Okay. Yep. You're probably then looking at another 8 to 10 that might be ready in the next 6 months. Then probably another, even a smaller, will be ready within a year. And then you're talking to maybe a quarter of them that might be 12 months out who are going to be ready. So
that's great information. And also that brings up the point some people may not realize this roadmap isn't the same for everyone, which is key to stress. So you actually put in time analysis, you're looking through their finances, their life situation, their goals. And so each roadmap may be different, or probably
completely
will be different for
each
person.
That's just the term we use, because for everyone, it's their own roadmap, basically, right? It's their own tailored roadmap. And the next thing to kind of move on from that would be at the point whereby, okay, we know how much money you need to bring to the table. We know how much money the bank will lend, right? Obviously, some of those things how much the bank are going to lend is in this moment of time. The next thing the bank look at is basically, can you show us that you can meet these repayments? Okay. So it's not just a case of saying, I'm earning this, I've got this amount of savings, but I haven't been saving any money on a monthly basis. You need to be able to, and this is absolutely crucial. You need to be able to say, well, I'm paying my rent every month, $1,500 there. You can see it going out of my bank account. On top of that, each month on a consistent basis, my savings figure are going up by 500, or whatever the figure may be that is deemed necessary by the banks. That will vary on case by case basis. It'll vary based on how much someone's looking to borrow. It'll vary based on the age of someone. Obviously, the younger you are, the longer you have to pay it back. The less you have to show them that you can meet these repayments. So the converse is, if the older you are, the less time, the more you need to be able to show the banks that you can do it.
Wow.
Obviously, with interest rates going up currently, what you might be paying today may not be what you'll be paying in 6 months' time. So when we're putting the roadmap together for people, we say to them, okay, this is what you're currently doing. It's fine. But if the interest rates went up by 2%, this is what you'd need to be. So say in 6 months' time you're applying and the rates did go up by 2%. Now, I hope that doesn't happen, but you just never know.
In this climate, it's a rising rate
absolutely. So you need to be able to actually say to people, well, I would recommend that you up your savings so that when you feel you are ready, that when you're presented to the bank, you'll get the amount of money that you need or that you want to borrow. But also being really, really important to note that I'm advising them at this point that rates could go up. So you're not thinking, oh, this is how much it's going to cost me. You're thinking in terms of, well, if rates go up, are we still comfortable borrowing this amount of money? And that's because you don't want any hidden surprise. Like buying a home is an exciting and it's a really rewarding experience. But you don't want to be suddenly going, oh, that's going to cost me €400 more per month.
And everything is always, when you move into a house, everything is more expensive than you know, you go to the store, like in the US, like Home Depot or Target, to buy a roll of paper towels and you walk out with $300 worth of stuff. You know, as a homeowner, there's always something that you want to add or fix or, you know, artwork or furniture or, you know, home goods. So, but from what I'm hearing, of course, is that the bank accounts are so important to have those organized because that's what the bank really looks at as proof. How long do they usually look? Like, is it do they want to see 6 months, 2 years track record?
It's a 6 month. They look back for 6 months, and 6 months. Like I have clients come to me and say, right, and and this is understandable because it's not something they do every day. They say they're saving €1,000 a month, right? And then you look at the bank accounts and go, well, actually you were saving 1,000 every month, but you took 900 out, right? And in their mind, they're saving €1,000 a month, but they're not. Okay,
Yeah.
so it's a consistent month by month. Some people get paid bonuses or big lump sums of commission, and they say that's a one big lump of savings, but it doesn't work like that because the way the banks view it is your mortgage is paid on a monthly basis. So they need to see month by month, could you show that you could meet these repayments?
Yeah.
So it's really, really important. The other kind of piece of advice I would give relation to bank accounts at that point is banks are lending money not just on your income, not just on your showing your ability to repay, not just based on how much money you're bringing to the table, but on how you look like from your bank accounts. You manage your bank state, how your bank accounts are managed. So they're looking for the kind of to determine the profile of the borrower. Okay, so what I mean by that is if they're seeing, now you might know this term, paddy power. It's gambling basically, right? If they see a paddy power being used all the time in your bank accounts, that can be an instant rejection because they would have gone back on their books and looked at people who would have defaulted on mortgages, and they would have seen a very strong correlation.
It's a clear signal that someone's erratic. Yeah.
Yes, exactly. Or living in your overdraft. So you might have an overdraft figure of €1,000, but if every month you're living in that, again, it doesn't demonstrate good money managed practices. Again, I'm not saying they'd absolutely turn you down on it, but if we're looking about getting yourself to the point whereby you're presenting the perfect application and not giving the bank a reason to say no, staying out of your overdraft would be very, very key. It's sort of similar to that, or related to that would be not having missed direct debits, or sort of if your electricity bill is 2 days is paid and it doesn't, the direct debit, there's no money to meet the direct debit. Again, there might be money in another bank account that's there, but again, it just demonstrates bad administration or bad money managed practices, and they don't want to see that. They're about to give, whether it be 300,000, 400,000, they want to be giving it to people, A, who can qualify for it, B, who through their rent can show they can repay it, but then also are managing themselves properly so that they feel they're giving the money to people who take their finances seriously. And none of us are saints, and we all may have had sins in the past, shall we say. There's one thing that I would always recommend people do is check out their credit rating. Because if in the past you had a loan or something like that was missed payments on, or there was a default on, you need to know that at the outset, because you can plan, because it's not a case of just, if it's discovered, which it will be because they run a credit check every single time, then you're on the back foot. But if you bring it to them saying, listen, this happened, these are the reasons why, and we can present it in the best possible light, you've a better chance of it not being turned
interesting
down.
That's how it works there.
No, it's it's totally different in but they do a credit check, and it's like there used to be one where it was gone after 5 years, but there's a new one that was come out in the last 2 years, and it's basically from day dot. Any borrowings you've had since day dot will appear on this. So now, obviously, with the passage of time, they view it less seriously, but at the same time, if there's any black mark, shall we say, you do need to know about it ahead of time so that you can explain it away.
Interesting. Yeah, that's all great advice. And definitely with the bank accounts, I know you help a lot of people structure, based on their goals, based what they want to qualify for. You help people structure, okay, this is what your bank account should look like. This is what you need to be saving every month, or what you need to be showing. So, and what's next on the roadmap where you're leading people?
Well, that's kind of a really strong summary of it. Other than just knowing, going out, I suppose I touched on this earlier, but again, what's it going to cost you? Okay. I'm telling you what it's costing you right now. When I put the roadmap together, I'm also telling you what it would cost you if the rates went up by 2%. So really the next part of the process is trying to get yourself ready. And that's can be easier said than done, because we all live our lives, and every day you're not thinking about buying a house. But if it's a long-term goal, it is something that each day you need to be thinking of or managing it on that basis. I would always advise people to be researching the area that they want to live in, armed with the information that I've given them, so that they're not wasting their time. Like, they're not looking to buy a house for $1 million when in fact they could only buy a house for 400 or 500,000. So like my slogan is helping dreams come true, and I do believe buying a home is a mortgage, or is a dream come true for everyone. But at the same time, I'm not a miracle worker, if that makes any sense. I make dreams come true, but not a miracle worker.
Yeah. There's a very big difference between dreams and miracles. Huh?
There is, absolutely. But no, I joking aside, it's really important that I educate people so that they fully understand where they stand, and they can start doing the necessary work and the research into the areas they want to live in. Or do they want to buy a new house? So, okay, let's go away and see how much, if they're going down the new road, well, how much does the Help to Buy give them? Do they qualify for the full 30,000 that's available, right? So that will be something that they should be checking out at this point, along with making sure, like, especially, I mentioned rent, but I think this is worth emphasizing again. If you're paying rent, making sure it's going out of your bank accounts. That some landlords prefer cash. That's not going to stand you any do you any favors when it comes to the mortgage. You need to have a direct debit going out of your account, so that basically you can show that the rent is being paid, so that's really
great, that all this information. And I'm going through the guide as you talk too, and you break a lot of this down into steps and even links to, for instance, level of tax rebate you would qualify for via Help to Buy and the different schemes. And so there's a lot of great information that's accessible to anyone. How about this briefly? The 4 elements or the 4 points of your role in helping them get their new home.
Okay, well, I suppose the first point is the roadmap. In effect, is
it's a huge one.
Yeah, ultimately, it's the starting point in any conversation. It's basically understanding where you stand and understanding what you might need to do to get what you want. Okay, and so that's in effect the roadmap. Okay, getting yourself then. So when you get to the point of being ready, okay, as in, your bank accounts all look fine, your income is where it needs to be to qualify for what you want to qualify for. It's then about basically, right, okay, which bank do I go to? Okay, so again, that's the next step of what we then would do. We will advise the clients, okay, well, these are what the different banks are offering. Which one do you want? We then go and make it happen. That's not a final decision, Norm, because I could make one recommendation today. You could take 6 months to find a house, right? And then at that end of it, there's a better option for you at that point. So the goalposts are always changing with the banks. So it's not a case of, so if you go directly to the bank and they say yes, they're not going to tell you that bank B is offering you a better deal down the road. Okay. So in effect, our role in this is to make sure that A, we educate you, but B, we're also making sure when you're ready that you're also then getting the best available deal that's out there for you. Now, you'd often get asked the questions, which is the best bank, right? There's no one fixed answer to that question.
It depends, of course, is always the answer, right?
Circumstance related, your circumstance related, because you might want to borrow X and there might only be one bank willing to give you X. So your choice then is with that bank, okay? Then different banks will offer different interest rates across the board, okay? And again, that's something that we'll be discussing in a lot more detail. I would never, at the point, you could have a conversation about rates every single day, and your view on it could change every single day for the next year. In truth, the conversation is incredibly important, but it's really only at the point in time where you find a house, okay?
Yep.
And even more so than that, it's actually at the point when the house is actually going to be ready. So say you bought a new house today and it's going to take a year to be built, which is often the case. Well, the rates today may not be what the rates are available when the house is actually coming to be ready. So again, we always relook at the market closer to the time.
Yeah.
As in, my advice around rates can fluctuate. I can basically say to you, if you were closing on a mortgage today, I'd be telling you to take a fixed rate. But if your house isn't going to be ready for 6 to 9 months, the rates might have gone up.
Yep.
And at that point in time, I'm going to be saying, actually, the next likely move is downwards.
Yeah.
So don't be taking a fixed rate.
Don't
take
lock
a variable
yourself
rate.
in.
And so again, hugely important. And I get asked that question all the time. And sometimes I feel I might be being flippant, or I'm not explaining it to the way that someone wants an answer to. But the reality is, it's not, it's about knowing what it's likely to cost you or what it could cost you if the rates went up by 2%, and then getting really forensic at the point in time when basically you found a house. But that's kind of the next step, is getting you approved. I often then get asked about rates at that point, and I kind of go, listen, we'll have this conversation about rates, but we'll have this conversation about rates at the point in time when you find a house, or if it's a new house, at the point in time when the house is actually almost ready. Does that make sense?
100%.
Then what else do we are rolling it? It's, I would often say this on the phone to people, like, our role is to try to take as much of the hassle out of the process as possible. Okay. But I'm a big believer in honest communication. We're still dealing with big banks, and sometimes the pace they move at is not what we would like. Okay. So, and they can come back with questions that you kind of go, why are they asking this question? And it can be frustrating. So our role is to manage the process, try to take as much of the hassle. So we might be coming back to you with one question. They may have asked 6 questions, and we've fought with them to say, listen, hold on, what are you asking 6 questions for? You only need 1. But we'd never educate, or we wouldn't bring all that information to the client because, well, we don't want to get them stressed, basically, right? So you'd often be having to manage that process, or ultimately managing it to the point whereby when they get the keys to the house. But I always say, listen, we'll communicate openly and frequently, but I can't promise you that it's hassle free, because we are still dealing with banks, and there's a lot of moving parts in this whole process, you know?
Yeah.
One other thing I do like, and this is kind of something that I enjoy, I feel if you're buying a secondhand property, I feel that I have ideas or strategies around how I would be bidding if it was me, right? So I would always say, and I've got some videos done on this, whereby I actually say to people, listen, I'd either try to make it happen quickly, come in at the start and try to take it off the market, or I wouldn't be getting involved till the very end and stealing it at the very end.
You've told me that before, and it's very interesting.
And in the middle, I just feel you're bidding against yourself. You're just being used as a sort of to bid the price up. So if you see a house at the weekend and you go, oh, we have to have that house, right? Well, I'd be saying, well, is there viewings lined up for next weekend? And if the answer to that is yes, well then, why would you put a bid in? Because that's only going to be used next weekend, saying, by the way, to bid the price up. So as difficult as it is, and don't get me wrong, it's easy for me to preach this and say hold fire, but when you want something and you're emotional about it, you kind of go, if we don't do this, we'll lose out. And I kind of go, well, actually, contrary to how you might think, you're best served by keeping your powder dry.
Very interesting.
Point, you know.
And so you advise everyone with those strategies when looking at the secondhand properties, which is key.
I do, but I would never gamble with their money, Norm, because ultimately you have to pay it back. So these are strategies, and it's a sounding board. You make your own decision around that, because I wouldn't want to be responsible for saying, oh, I paid 5,000 more on a house, I could have got it for. You'll never know anyway in the heel of the hunt. But I've just seen the advice I've given work on many occasions with clients, and it's very rewarding. And I think on that point, it's always really important to note, have a walkaway point, right? Have a point that oh, we're out the door here, right? And that can sometimes be dictated by what the banks are prepared to do. But if they're not, and you are bidding on a property that is within your budget, well, make sure you know when you walk away and you don't get too emotionally involved, because there will, even though you might think, oh, this is the perfect, there will be other houses, you know?
No, and that's important too. I think when this is a lot of money for people, it's their home. There's a lot of emotion tied into it, right? With any big purchase, big investment, their judgment gets clouded by those emotions, by fear, by greed, by, fear of missing out, by the, emotional element. So it's important to have a neutral third party giving clear-eyed, clear-headed, sound advice, not telling them what to do.
I often describe myself as a teacher, like as in the tough love, basically. Sometimes I'm saying things that people don't want to hear, right? But I feel it's my duty to actually to impart it. And I often have said to people, I'm not trying to kill the dream here, by the way. I'm just trying to give you some sound advice so that you don't run away with yourselves here, because it's in my best interest for people to buy houses. but I want to make sure they do it properly, you know?
Yeah, no, that's, and, you know, once that the initial emotion wears off, they'll thank you for that so much, whether they buy that house or not, you know? So that's fantastic. This
Yeah, I hope
roadmap,
so.
there's a ton of value. What are some next steps for someone who wants to get started with you, who wants to go through this process?
Well, and this is where it gets even more, the process becomes more challenging. This is when you're serious and when you're ready, it's the paperwork, right? Now we have a portal system that we use whereby you will upload your paperwork. It keeps it organized, helps keep you sane, keep me sane, in that all the communication around each item is in the one place, so we can keep a very streamlined process. What we would then, I have a team of people who check the paperwork. Once all the paperwork is in, I then analyze it all as if I was the bank. Okay, so I'm analyzing it. If I'm the bank, then I will come back to you with questions, so that we'd be going to the bank and say, here's the answers to the questions that you may have. Okay, I'm telling you how much you'd qualify for, and then we'd have a conversation around which bank, and then we submit an application. But the paperwork is painful.
Yeah.
We're 2023, and some of the banks still post out statements. I don't know what it's like in your neck of the woods, but in 2023, there are statements that clients cannot get online, and they make a phone call, they order them, they're told it'll be out in 10 days, right?
Yeah.
Like, absolutely nuts. And then 10 days pass, and they have to ring again, and it hasn't come out. And then if they haven't got the statement and they're waiting, other paperwork they've got has now gone out of date. So it can become, it can become a bundle of pain for people. So the more organized you are, the less of a pain this is.
Yeah.
Shall we say.
But people should be, it's good that you're transparent. People should be aware that this is where you're really wrestling with a lot of frustration with the paperwork. And so knowing that going into it, they have to be very organized.
I'm very upfront with people about that, purely because you're trying to buy a house. You are looking to borrow a lot of money, and yet sometimes trying to get the paperwork is you're waiting on your employer to fill a form in, right? So it can be very stressful. I've had people walk away from it.
Yeah.
And I'm being honest here. It's more they've walked away because this is it's too much hassle right now. Yeah. But ultimately, I do say to people, it's hassle. But at the very end, it's really, really rewarding. Okay, when you get the keys to your house, it does feel rewarding. And I would give that. I tell people message.
Too. What? Yeah, and I tell people too during that. I've gone through that process, and in myself buying homes, and then of course being a mortgage broker a million years ago in U.S. I say this is where you earn it. If it was easy, then everyone would do it. But this is the barrier to entry. So if you could get through this, then you'll have actually earned those keys. And you'll know that you separated yourself.
I'm going to steal your words there, Norm. I like them. Okay.
And then they see it as more, it's a challenge. Okay, like I can separate myself from the pack by getting through this. So but either way, it's challenging with the paperwork. Yeah.
I wouldn't want to. I wouldn't. Now I'm constantly working on systems and technology. I am hoping to make, with the world that we're now living in and the technology advances, I'm hoping that will become an easier process, and I'm hoping to be ahead of the curve or ahead of the game on that, but we're not there just yet,
Yeah. Yeah. Some ways we're, all this artificial intelligence, and we're incredibly complex, and some days we're still sending things out in the post.
We might talk around that artificial intelligence on another day, because I think it's a fascinating conversation to have.
That could be next week or next month on the Tea and Mortgage podcast, huh?
That's not a bad idea. I'm hearing it or seeing it everywhere I look at the moment. I don't know about you.
Oh, yeah. Well, thank you so much for going through this. I think this is going to be great value to people, and having this on the podcast, like I said, we'll have different forms that pop up and links in the description. And then we'll also put this out, the video version, so people can see it on YouTube. Yeah, no worries. No worries. Well, when you have a superstar, you might as well put them on stage, right? So I figure we might as well highlight you.
I'm blushing here, Norm. I'm blushing.
Well, John, I know you have a big game to get back to, huh?
I do indeed, mate.
Yeah. Well, thank you for this information, and maybe you want to tell everyone, thanks for listening to Tea and Mortgage.
Yeah, everyone, thank you very much for listening. I hope you found this of value. We really just focused on one subject today, but we'll be back to our many and varied subjects on our next outing. What do you think, Norm?
Absolutely. And maybe even a couple great more guests from time to time, huh?
Sounds like a good idea.
All right. Well, thanks everyone for listening to the TN Mortgage podcast with John Coleman, and we'll catch up with you soon.
Cheers. Bye.